Tips to live below your means and save money. As they say, living within your means is about not spending more money than you earn. Doing so doesn't necessarily imply that you can't enjoy your life by spending money on the things you love. Instead, you can make deliberate financial decisions to build a more stable future while still experiencing the occasional takeout from your favorite restaurant. In this video, we'll be talking about 8 ways to live within your means and save money. Let's get started. Number 1, establish your budget plan. One of the most crucial steps that you need to take to stop living paycheck to paycheck is to start budgeting. You may fall into a never-ending debt cycle if you don't have a good hold on your finances and the amount of money coming in and going out. The best way to create a budget is by calculating your income and expenses. You'll then be able to tell whether you're living within or beyond your means after coming up with an elaborate budget plan. If you'd like to determine how much money you make each month, it's important to consider not only your monthly paycheck but also additional sources of income, including child support, remittances, your tax refund, and money from side gigs or a second career. The next step is to figure out how much you spend each month. This comprises of all your monthly transactions such as loan payments, card payments, premiums, rent, mortgage payments, groceries, electricity, and other necessities. Because each month's spending may vary, it's best to calculate your monthly expenses to 6 to 12 months and then average them. Number 2, keep track of your spending habits. After you've made a budget, you should then keep track of your spending to ensure you don't veer off target. You can do this efficiently by creating a spreadsheet or using one of the many budgeting applications available for mobile phones to keep track of your spending. Taking note of each purchase is a terrific method to make you think twice about making a purchase. Once you have all the information on your spreadsheet, it's time to figure out whether you're living within the means or going overboard. You can achieve this by subtracting your monthly costs from your monthly revenue to arrive at a net income. If there's any money left over, that's fantastic. You're making do with what you got. If you get a negative figure, you're probably living over your means and you'll need to make some changes to get back on track financially. By being consistent in doing this method, you won't be tempted to buy that $7 cup of coffee if you know you have some at home ready to brew. Reviewing your receipts can also offer you a better sense of where you might save money so you can live within your means. Number 3, save first, spend later. One best technique to do this without too much pressure on your decision making is by creating saving accounts that automatically deduct funds from your paycheck. You can also consider transferring money from your 401k, Roth IRA account, and emergency funds before spending the rest of your income on something else. Most banks and workplaces allow for automated transfers, which means that when you get paid every week or two, funds can be automatically disbursed to various accounts, allowing you to avoid overspending. Remember that when it comes to saving, the first aim should be to establish an emergency savings fund to help you get through a job loss or other financial hardship. The rule of thumb is to always allow at least 30% of your monthly income to savings. Following that, you should concentrate on retirement savings and saving for future purchases such as a new car or a home. Number 4, do not depend on credit cards. Let's admit it. Credit cards are very useful because they allow you to make large purchases even if you don't have the cash up front. You can pay them off over the course of the month. However, based on recent statistics, it turns out that 34% of Americans have credit card debt of less than $5,000, while 12% of the population has credit card debt of $5,000 to $9,999. Surprisingly, only 35% of the population of the United States has no credit card debt. These startling figures demonstrate how alluring owning a credit card can be. When it comes to credit cards, it's best to limit yourself to 1 or 2 to avoid overspending. It's also a good idea to keep your credit card usage below 30%. To prevent exceeding the recommended credit card use percentage, for example, if you have $10,000 credit card limit, you should spend only $3,000 or less. If you use your credit card to make more purchases, it may indicate to the bank that you are in financial hardship, which could harm your credit score. Instead of relying on credit cards, you might want to consider buying something with cash or a debit card if you can afford it. If you don't have the cash to buy what you want, it's best to wait and think twice if you really need the item or not. Number 5. Plan large purchases ahead of time. One common reason why people end up making impulsive purchases is the lack of planning and saving ahead of time. Saving little sums of money for large purchases can help you prevent impulse purchases that can harm your finances in the long run. If you're not sure if you can afford a vacation, try putting aside a small amount of money each week in a savings account rather than charging the entire amount or blowing your budget. Number 6. Wait for great deals and promotions. Another way to save money is by waiting for promotions and discounts on major price purchases. You can usually forecast when an item will be discounted, such as after a new model is released or during a specific season. Taking advantage of sales is a fantastic method to get what you want while staying within your budget. But before we continue, go ahead and click the subscribe and like buttons. It takes a lot to make these videos. Your small action tells YouTube to keep promoting our videos. Also tell us in the comments section which one of these tips you find easier to do. Thanks. Now back to the video. Number 7. Reduce meaningless spending. Americans are known to spend a lot of money. In fact, according to the Bureau of Labor Statistics' latest expenditures report for 2017, Americans spend over 80% of their annual income. The average yearly income before taxes in 2017 was $73,573, with an average annual expenditure of $60,060. These expenses range from meals, that's $7,729, to housekeeping materials, $755, and include every element of American living. Fortunately, you can reduce your spending in some of these areas if you wish to live within your means. Do I really need this? Ask yourself as you track your transactions. By questioning each purchase, you may have a better understanding of your priorities and what you actually want to spend your money on. You might be able to get out of debt, pay off loans, and save money by spending less than you earn. Some of the areas where you can cut back on wasteful spending, depending on your interests, include a gym, television, and entertainment subscriptions. Cars. Why buy a new automobile when it can lose up to 20% of its value in a year? Buying a used car can help you save money while still getting you where you need to go. Food and drinks. Pack a lunch and cook at home instead of going out for lunch and dinner. Clothes. Sure, it's wonderful to be fashionable, but do you truly require the most recent Air Jordans? Shop at thrift stores or secondhand stores to save money on clothing. Number 8. Downsize your home. It's understandable that moving out of the place you've transformed into a home might elicit a wide range of emotions. Buying the most expensive property the bank thinks you can afford, on the other hand, may cause you to fall behind on insurance, mortgage, and maintenance payments. Instead, you might pick a fixer-upper that is less expensive and only requires a few minor house modifications. The average American worker's wage now has the same purchasing power as it did 40 years ago. However, house prices have risen 47% in the last 6 years, while salaries have only risen 16%. Because of the present income-to-housing price ratio, moving to a smaller property can be a better way to improve your financial situation. While having a guest dining room sounds lovely, if it's only utilized once or twice a year, it might be more cost-effective to sell your property and relocate to a more affordable home or neighborhood.